LiteFinance, the world of financial freedom.
Hello everybody, it's Monday, November 28th. It's time to start the market forecast for this week. First, as always, we will start with the macro calendar and then we will discuss some fundamentals based on which we will make a plan for Euro USD. So the first day with some key data publications is Tuesday, where we will get the GDPs from Switzerland and Canada. Later we will receive numbers on CB consumer confidence from US, and the Bank of England Governor Bailey will hold a speech. Next is Wednesday, which will be one of the busiest day of the week as usual. We will get a CPI from the Eurozone, then ADP employment, another revision of a GDP reading, pending home sales, crude oil inventories, beige book along with the Fed Powell speech, and all that from the US. Thursday is another packed day. We have manufacturing PMIs from Europe and the US, and PCE inflation data also from the United States, which, for the reminder, is another gauge at which Fed is looking at in terms of inflation observations. Finally, Friday, as it is the first Friday of the month, we will get NFPs and labor data from Canada as well. And that's about it in terms of calendar. Now, the Fed began to tighten monetary policy earlier and more aggressively than the ECB. Now the US regulator needs to slow down the increasing cost of borrowing. ECB officials should think twice before doing so. The chances of the deposit rate 75 basis point increase in December are higher than the increase in the federal funds rate. This fact contributes to the bullish Euro USD. According to ECB Executive Board member Isabel Schnabel, there is no need to slow down the rate of monetary restriction now. First, massive fiscal stimulus by government could keep inflation high for a longer time expected. Second, expectations of a less broad ECB move in December pushed down European bond yields and boosted stock indices, weakening financial conditions and making fighting high prices difficult. Third, the biggest misconception is the assumption that inflation will fall quickly. Most likely, it will remain high for a long time. The latest consumer confidence, PMI, and the business climate data are better than expected. Together with the fall in gas prices, this indicates that the recession in the Eurozone will be less deep than expected. The European economy will soon start to recover, so the ECB needs to think about how to support this process. Eurozone strong data strengthened European stock indices. They have been outperforming the S&P 500 lately, contributing to the capital flow from North America to Europe and helping start the Euro USD rally. Euro USD will fluctuate a lot in the future. Investors should not count on a buy a dollar and hold it strategy that has been effective in 2021 to 2022. From time to time, it will be necessary to take profit and switch strategies. So, if the price falls below 1.038, it would be reasonable to enter short trades. But for now, look for the pullbacks and enter only longs. So, that will be all for this video. Thank you guys for watching, and I'll see you in the next video in a week. Take care and goodbye.